So welcome everyone, welcome to Supercharging DeFi on Algorand 2023. So we have with here today Benedetto, CEO of Fox Finance, Federico, CEO of Algocellar, Michael, CPO of Optio Capital, Jonathan, co-founder at Algo Foundry, and last but not least, John, co-founder of Algofi. So, let's have our panelists quickly share with us about their project and the applications that they've been working on. Ben, why don't you go first?
Yeah. Nice to meet you, everyone. I am Benedetto Biondi, CEO of Fox Finance. For those who doesn't know what's Fox Finance, it's, as defined for now, a lending protocol plus liquid governance. A lot of you may know Algo. But Fox is turning now into a set of DeFi tools, non-custodial, for managing your digital assets. So we are changing to build more and have a new product offering.
Federico?
Hi, hello, everyone. Federico. I'm one of the co-founder of Algocellar. Algocellar is an infrastructure for digital fund management on blockchain. So basically, we are building this infrastructure for everyone to create his own fund on, in this case, Algorand, and for everyone to invest in any fund created in the infrastructure. The infrastructure is Oracle-less, non-custodial, and we don't use any Oracle.
Morning, everyone. Michael Cotton, Chief Product Officer for Optio Capital. We focus on three particular verticals, which is capital deployment and investment, incubation and acceleration. The Optio team is led by AJ Milne, our CEO. We in particular believe that investment is not just about providing funds, but we really focus on helping and supporting founders across a range of different verticals, including shared services layer, tokenomics advice, product advice, marketing, and really assisting and filling the gaps where help might be needed, where we can bring value that also helps save funding and time and costs for the projects themselves.
Hi, everyone. I'm Jonathan. I'm the CEO of Algo Foundry. So Algo Foundry is a venture studio that we launched in January in partnership with the Algorand Foundation. And our role basically is to work with founders to bring projects onto mainnet on Algorand. This year, in the last 2 months, we've launched a bridge on mainnet called Messina. We've also launched a multi-sig safe called Foundry Safe. And we worked with a very, very great founder called Edward Lashinsky to launch Algorand, which is a decentralized options vaults on Algorand, which is the first one.
Cool.
Hi, everyone. I'm John, co-founder of Algofi. Algofi is a one-stop shop platform for trading and lending on Algorand. And over the last year, since last Decipher, the team has built out a lending protocol, an AMM, a stable swap protocol, and more recently a governance protocol. And this has essentially allowed retail and institutional users to very cheaply and efficiently trade and lend. And over the next 6 months, the goal is to start integrating more community developers to support and upgrade the platform. And over the last year, the growth has been pretty good, with around 90 million of TVL and about 15,000 users today. And we're really looking forward to growth over the next year.
Awesome. Thanks, John. Thanks for sharing. So we have seen Algorand DeFi grow from 35 million algo worth of TVL at the start of this year to what we have today, which is over 500 million algos worth of TVL. That's over 15x, essentially. So I think we have observed the growth of DEXs, and we have even seen DEX aggregators and liquid governance come in this year. So my question is that, what do you guys think about 2023, and what kind of trends do you observe in the market? Yeah, Ben, what?
Yeah, obviously this year has been a bit dramatic, but nevertheless, Algorand has done great. I think this is mainly due to Algorand governance, and I'm very excited about the next development of the Algorand Foundation governance. That's great. Fox Finance has grown together with it, right? We were the first protocol in growth in Q3 on DeFi Llama in TVL, so that was great during a bear market. Was amazing, right? So I'm very optimistic about the 2023 because I think the narrative for DeFi has never been stronger as now. People are tired of seeing their asset being managed by someone else that they didn't ask for, so that's time to change, in my opinion. That's why with Folks, we really want to target to build a simple DeFi, but useful, that can open well to the masses, but as well for experienced traders. So I think also that we will see more mass adoption due to the integration of real-world tokenized assets going to DeFi. So my answer is that yes, I see that 2023 good, because we, as founder, we push for that to build a good product that will compose with everything that is going on the chain. So
yeah, that's
bullish.
awesome. That's a very great take. So Michael, what do you think, as somebody that's building from the perspective of a venture builder as well as an application builder yourself?
Yeah, look, I think we're really at a maturation point for DeFi, and I think one of the brilliant things about Algorand is it has the performance capability to, in many ways, replicate CeFi, which I think is going to be very crucial, especially to what we've seen play out in recent months. But as a part of that key, I think we as this next stage, we really need to see genuine value on chain being created. So things like real yield, real utility, the ability to borrow against real-world assets, the kind of functionality that will bring in new users to adopt the technology for exactly what it's meant for, which is efficiency and value creation they can't find elsewhere. But I think the core to that is, Algorand does have the performance capability to really replicate the usability of things like CeFi. The on-ramps are still a difficult barrier for us, which will be fairly key to this next sort of adoption point. We hear talks about Web 2.5 a lot, but that's going to be fairly crucial as to how do we get that next generation of users who will use the technology for its utility and care less about the fact it's blockchain. I think that'll be a fairly crucial piece to this next stage of growth.
Yeah, 100%. I mean, it's interesting that you mentioned you, right? And when we talk about DeFi, it's always about discussing about use. So I think my next question, I think my next question, and kind of like speaking into 2023, will go to John. John, you guys are the largest TVL on Algorand DeFi. You are the market leader. So what do you see in 2023 that has to do with use for your users, essentially?
So I think for us, it has a lot to do with the user and developer acquisition, because over the last year, Algofi and the rest of the ecosystem has built out all of the primitives that pretty much drive what you would need in a DeFi ecosystem. We have trading, we have lending, we have staking, a variety of other compositions of that. But I think what we are still lacking is getting that in the hands of more users, particularly on the retail and partly on the institutional front. So I think one thing that we're super focused on is making it very easy for users to get access to the platform. I think this entails a lot of integration, so trying to get integrated in some of the more popular wallets that other DeFi users are on, like MetaMask. Beyond that, intelligent marketing and educational materials to make it easier to access the platform. And generally speaking, just offering good customer service, which has worked for pretty much all companies since the beginning of company building. So we really pride ourselves on that. On the developer front, though, we're also trying to make it a lot easier for people to build on the Algofi contracts. And so one thing the foundation is doing, John Woods noted earlier, is this Algo kit, a tool that'll make it easier for people to launch contracts. And one thing that we'd like to do is get the Algofi contracts, and I would encourage the rest of the ecosystem to get their stack in there to make it super simple for users to deploy apps that compose via intertransaction. And this will allow all sorts of different applications like asset managers, different derivatives thereof of lending and trading to sprout. So I think those two key pillars we're focused on.
Cool. Thanks, John. So right now we are kind of going into individual application questions. So Algorand DeFi has basically matured over the past 1 year. So I'm sure a lot of apps, a lot of users kind of want to learn from a lot of these builders on stage right here with me. So the first question kind of goes to Ben. So Ben, why is Folks Finance always so quick to evolve? When we first learned about Folks, it's a borrow and lend platform. And then shortly after, you guys became one of the market leaders in liquid governance. So can you share about your secret sauce with the crowd?
Yeah, so we are lucky for a reason, because we are backed by a software house, which is Blockchain Italia. So we have all, like a mother teaching us, bringing us, but still, I I need to thank the team, honestly. We are 23, and we keep growing, and we keep hiring amazing people, and we are very young as well. Like, we have the seniors that teach the young, but the young are very energetic, right? So we keep fighting, we keep building, we never stop. So that's our goal, right? So we want to go over of what is DeFi now. So even when we started, for us, there was Aave as an example, and we look at it like, okay, they were the first lending protocol, but they surely have done something that could be better, right? So, because DeFi is very new. We are still in time to build innovation that can scale up, right? So that's the Folks Finance target. And out of the technology, we are also very community focused. Like, our community loves us. I rarely see a bad comments about Folks, right? And if there is one, we try to solve it as soon as possible. So that's very important for us. So for me, the reason is also just the team, right? The team and the community, because the community suggests, the team listen, and the team build.
Yeah, that's awesome. I mean, we're always building for the community, so that's the most important thing. So for Federico from Algocellar, so I think a lot of people might have spoken to Federico. He has built DexTF on Ethereum, and after successfully launching on ETH, he has made a conscious decision to actually migrate and move to Algorand. So for Federico, so maybe you can share a little thing, a few things about.
So maybe I do a step back first. So we started this project was 2017. It was a different world, of course. At the time, we wanted to create a crypto hedge fund. It was early 2017, but we didn't find any jurisdiction or regulation that was able to make this for us. And so we thought, okay, this could be a good problem to solve. Why we don't create an infrastructure on blockchain for digital fund management where anyone can create his own crypto hedge fund or digital asset fund, and then one can invest directly in peer-to-peer on this platform. And that time we were looking which blockchain we could use. It was 2017, 2018. We were looking at which blockchain to use, and we actually met with in late 2018 with Silvio Micali and Navid in Singapore, because I'm based in Singapore. And so we started to work and to think that maybe Algorand could be already the blockchain for engaging with the traditional player, because that's why we liked a lot Algorand. We think that could be a blockchain that can engage the B2B. But at that time, maybe both of us were not really ready, because we were early stage, and also Algorand was not even in mainnet. And so we decided, for obvious reason, to go on Ethereum. And so we built our first infrastructure on Ethereum. We launched in 2020 during the DeFi season. It was, of course, a bull run. So everything was much easier, the engagement, the TVL, and all the stuff. But then in 2021, we were stuck when the gas fee spiked on Ethereum. And so we realized that actually Ethereum cannot be really the chain suitable for the people that we are trying to reach, that maybe is the institutional, the traditional financial player. And that's why we start to look around again, and we decided to go multi-chain. So first chain we developed was Avalanche. It was just a test in December last year. And then, of course, we got back to Algorand. That was our first choice in 2018, 2019. So
awesome. Yeah, I think it's really important when we say applications are selecting to build on Algorand. At the end of the day, you look at several factors, and we always share, on Algorand, the fees are always consistently low, and that's very important for the cash flow and the business predictability for businesses, essentially. So I'm very glad you made the decision to move to Algorand.
Yeah.
Cool. Awesome. The next question is actually for Michael. So Michael, as a venture investor, as well as a builder within the space with Optio Capital, we have heard a lot of people share about peak blockchain. We have seen growth in 2013, 2017, and also 2021. So what are your thoughts about pushing into 2023? Do you think we will see kind of like a slowing down of development, or it's going to accelerate, actually?
I think what we'll see is a change in focus. So I think what we've really had is a period now to really battle test the technology, which, as I said before, has proven that Algorand is a high-performance blockchain. As we heard Stacey say earlier, zero downtime, transaction speed is incredibly fast, transaction cost is incredibly low. The stage now is where do we find that real piece of utility? So I think slow down is probably the wrong description. I think a variation in what the focus is, and I think that core focus is how do we bring that real utility on chain, which is what will be core to adopting both users and developers. At the moment, there's an incredible focus on TVL and transaction volume, both obviously very, very powerful metrics and great metrics to follow, but at their core, we need to be looking at why those metrics exist. What does high TVL mean, and is there real value being created, or is there artificial value being created? So I think what we've used is things like token emissions to really prove the tech. We've used incentives to really prove out that this technology can function in the way that we intend, and it can genuinely be the infrastructure for both financial tech, but in particular, which is what we're talking about today, but also other forms of technology. So I think what we'll see now is we need to change from token emissions creates TVL and transaction volume to token emissions and incentives are actually driving genuine adoption. Traditionally in the Web 2 space, you would use these as lead-in losses or marketing campaigns that have a true understanding of the long-term value created through these incentives. And I think we'll see a change to, okay, what do those incentives bring? What is the long-term value from those incentives? How do we bring more people into the ecosystem through an incentive program that is going to create long-term value? A great example is what does real yield look like? How do we bring people that are actually gaining value from the technology without having to be overly incentivized to do so? So a great example would be digitizing real-world assets and allowing borrowing against assets that have traditionally been very, very difficult to gain access to equity through. That's a great example where people are more than happy to pay a price to access that kind of a liquidity. So I think that'll be really key to this next stage. So probably, Daniel, less slowing down
Awesome.
and more a change to what this next generation of tech looks like.
Super. And I'm actually for it. So I think within DeFi, I think there was one chronic problem that actually bothered a lot of debts, which is essentially when the Federal Reserve increased rates to like 4% that's sitting at right now. DeFi, which was experiencing hypergrowth in the past 2 years, essentially had a 0% organic rate, right? So bringing in real-world assets into the space, especially on Algorand, is going to be very essential to the next stage of growth.
Well, and to that point, GC Head of Capital Markets of Optio Capital, we're talking about this morning. We need to see returns of 8, 9, 10% for it to now be viable to adopting and taking the risk in DeFi, which is where we need to be ensuring we are creating real yield. And if we are going to incentivize for adoption, great, but it needs to be on the basis that there are adopters that will stay long term. Once they're in, they have utility, they have value, they only need that first lead-in loss marketing expense to get them on board to then be long-term users.
Yeah, awesome. Thanks for sharing. So the next question actually goes to Jonathan from Algo, right? So we have heard about how large the derivatives and options market is, in traditional finance, So that is like so much larger than the spot market that we have in TradFi. So a lot of players and developers like yourselves are actually pushing towards providing derivatives and options on the DeFi market. So what do you see in terms of developments in 2023 and beyond?
Yeah, I mean, we're of the opinion that having an active and strong derivatives and options market is really important for the DeFi space in Algorand. And I mean, we were very, very pleasantly surprised because the way that Algorand works is basically it sells options to market makers. And the market makers have an incredible appetite to actually take up options on Algorand. I mean, when we first spoke with them, all of them were committing 50 million vault with no problem, and they're saying if you can ship more, we'll take more. So there is a huge appetite for it, and I think that the push going into 2023 is how do we make that easier for people to get into? How do we create structured products that are, like you say, creating real yield, that are making it just easier for people to get into and fitting their risk profiles, fitting the exposures that they want. And I think as we roll out more strategies and more structured products around that, it's I think really exciting to see where the adoption will come from and how quick it'll come up. But I think we're very high on it.
Yeah, that's awesome. And I want to add that Algorand actually raised $1.5 million in the depth of the bear market during everything, when everything was crashing around, they actually successfully closed their round. And I think that's a testament to working towards looking at what the market wants, and what Michael has shared about you, right? So that's really interesting. Yeah, awesome. The next question actually goes to John at Algofi. So we have seen Algofi grow tremendously. In fact, in the last Decipher, you guys were announcing about Algofi V1, right? And during that period, Algofi hasn't even fully launched yet. So we have seen a tremendous amount of growth on you guys. You guys came out with zapping, you have stable swaps right now, you have liquid governance. So what's the next step for you guys, in terms of your roadmap, and what are the new advancements that you see in 2023?
Sure, thank you. So mostly, well, the first piece is the user and developer adoption. Like, we have these primitives that are getting used by people, but it's still constrained to our community that we find on Discord, Telegram. So I would say it's still quite crypto-native users. So I think getting more developers that are either in Web3 or looking to get involved from Web2 is one of the main focuses. Beyond that, making it easier for users, although with this, with the FTX situation and all the things that we've seen play out in the last couple months, I think it might be hard to entice people that are using traditional Web2 fintech products to get into Web3. That said, we'll definitely try very hard there. Beyond that, we're also focused heavily on a decentralization roadmap, because now that we've built this open financial platform, it's very important to get more people the ability to update it and sort of determine how it will evolve over time, because that is one of the core principles of DeFi, the fact that not just the transparency, the fact that it's composable, the fact that it's on-chain, but also that people can affect changes on the platform and it's not controlled by one team. So we've already launched our DAO, which came out about a month ago, but one of the first deliverables will be a fully on-chain execution platform. So we're hoping in the next couple months we can launch something that enables users to launch proposals, vote on them, and then fully make the changes through smart contracts, which is exciting because that'll be one of the few fully on-chain execution platforms in crypto, and the first one on Algorand. So very focused on that. And then beyond that, just building out our open source contribution procedure, decentralizing the front end, just a number of things around making it more accessible by the community to really espouse that important DeFi principle of openness and collaboration.
That's awesome. So I wanted to kind of speak about FTX, right, and kind of lead it to the next question. So I'm sure everyone on the panel and everyone sitting here, you guys know someone that has been impacted by FTX, and it was a big event, and I'm sure a lot of people lost a lot of money. So in addition to FTX, we actually have seen Voyager, Celsius. We even had BlockFi recently declaring bankruptcy. So I think my question to the panelists is, how does CeFi improve upon CeFi alternatives, and where does DeFi actually fall short, even in comparison?
Yeah, so it is pretty easy for me because the way we build, for example, every loan is over-collateralized, any operation is trustless, so it's totally different philosophy, right? So when you use a centralized exchange, okay, you are having some advantages, but to me, they are much less than the advantages you have using DeFi. Obviously, centralized exchange doesn't work. At least they must be very regulated as is traditional finance. And they will exist, right? But for me, DeFi is just so efficient, and the composability that we will build, for example, we were mentioning that now we have the primitives on Algorand of DeFi, right? And there is many dexes, Algofi, Tinyman, Pact, Humble, and then there is Folks with the lending. And the way that the new app that we will see in the next year, they will build more advanced things. So to me, we are creating this, let's say, trading ecosystem that traders can use, and it will be better. So you will have a simple stop shop, like to buy asset and hold it, but as well you may onboard also other users that prefer to use traditional exchange because of the efficiency or whatever, right? But that's two words that I don't think they will fight to each other. simply centralized exchange. They may stay there for those who want this. And then we will have DeFi, which will become always simpler, and that's on us, like on founders. I really care about this, like we really care at Folks, because every time that someone says, okay, centralized exchanges are much simpler to use, I don't think that's very true. Maybe at the beginning, because you have a bit to change mentality, right? But as soon as we will have tools that allow you to not store your seed phrase, and that will be something easier, right? And then you have all the primitives, which are good, and they will be easy to use. Then DeFi will take over, in my opinion. There will exist both worlds, but the growth for DeFi is there, and it's inevitable.
Yeah, it's interesting that you mentioned that storing of private keys is one of the biggest barriers, right? So I'm sure some of you guys are noticing and working on Auth0, where you can log in with Facebook, log in with Google, and I think that's really going to change the user experience for the users. Yeah, in terms of FTX, Federico, what have you seen in the market, on the TradFi side of things? Are people getting jittery?
Yeah,
and,
of course. I mean, everything was affected, by the way. We lost money, the project lost the treasury, people stopped the discussion. Of course, this was a big event that, especially for the B2C, so the retail, put a lot of bad things in the market. On the other side, I think that instead there are two different phases in this moment. There is the retail that is affected. There is the disaster, FTX, the drama, everything. On the other side, instead, there is still some discussion with the B2B, with the traditional player that actually are going much better than before. So I think that they start to understand, they start to be curious, they start to want to engage, to see what is on the other side. So, of course, I'm totally DeFi, so I'm on this side.
We are based.
Yeah, but probably, yeah, I'm based, so, but I don't think that at this point is probably the best solution yet. So we need to find the common ground probably between the two worlds for them to understand and to be a little bit more easily, to come more easily near to this world, and for us also to understand. So my background is traditional finance, so probably I can understand both of the two worlds. For example, now we are doing, for us it's important because as a startup DeFi, we are doing a POC with the regulator in Singapore and Deutsche Bank. And it's not very maybe too difficult from the tech point of view because we are just showing them the process. So we are already live in the digital world, and instead they are in the fiat world. And we are showing them that actually a client from their side, they can already invest in a digital fund. There are already all the steps, and you just need to connect the dots. And the dots are already there, so crypto to fiat, fiat need to be in a wallet need to be whitelisted. For example, we are building a southbound token, this one on Ethereum. Then you need to find the power of attorney, so who can manage the portfolio. And then from there, you are already in the digital world. At this point, you can connect, for example, the Apple hours, but probably also all the adapters are here. And you can do whatever is DeFi.
Yeah, that's definitely interesting. I mean, he just completed a MVP with Deutsche Bank.
Yeah, actually, so, yes, it's not completed yet, so we'll complete it next month, but it's ongoing. It's interesting because for us, of course, we have the first interaction with the very tier one bank, and for them, looks like that they want to understand a little bit more the process. And actually, we're also analyzing for them what could be the role of the bank in the future if, for example, for us, digital fund management became a reality. So how they change their role, how they change their fees, how they monetize, and stuff like that.
Awesome. Yeah, that's really cool because even in times like that, we are looking at banks and FIs kind of like making pushes into DeFi, and I think situations like that really make them realize that, hey, having your values on-chain, auditable is really, really important. And I believe Cumberland, which is one of the larger market makers, recently had a tweet thread, and they were sharing that, hey, they were going to explore a lot more on the just pure DeFi and on-chain value, which is one of the more important things. So, kind of like, Michael, do you have anything to add in terms of FTX? And
yeah, look, I think CXs are absolutely necessary. Currently, they are the core on-ramp and off-ramp. I think even Devin's announcement earlier about USDCA being accepted at Binance is a great example. The reason we're excited is because of access. It allows people to enter and exit. To think everything can be decentralized is an unrealistic goal, I think, because in reality, we need money or funds coming, or even other elements like data coming in from Web 2 and the traditional space into the Web 3 space, and centralized exchanges play an absolutely core role in that gateway between the Web 2 space and the Web 3 space. I think what that then presents is, well, how do we make it safer? And I think at its core, one, you shouldn't really be using centralized exchanges as a storage location, but the reason that it is done is because it is more familiar, which means it's easier. If it's something you're more used to, it's something you find easier to manage, which means we do need to make DeFi and access to decentralization simpler, which is something we've all talked about and we all agree on. But I think the other part is how do we make centralized exchanges or centralized or non-on-chain opaque organizations more transparent? Things like proof of reserves are not enough because in reality, in these cases, which we've seen with FTX, liabilities can also exist that we don't have transparency on, which means if they've got $2 billion worth of assets and $2 billion worth of liabilities, they actually don't have anything. So it's almost a live proof of financial health is going to be fairly key. And this is not just a centralized exchange problem. This is really an Oracle issue of being able to get trustworthy data on-chain that we know is genuine and we know can be trusted and actually results in the true information we're looking for. But being able to see live financial health checks, a proof of financial health, I think will be very, very key to trusting the centralized organizations more. So I think in reality, again, we need centralized exchanges. They are the core funnel for both entry and exit. We need them to be more accountable, and then we need to make DeFi more accessible so we do have more people that are willing to transition into DeFi and not use centralized organizations as their home base.
It's really interesting that you mentioned that having this hybrid model with exchanges and cooperation between exchanges and DeFi is going to be the next thing. I really think that's the natural next step. We would see more growth in that aspect, and there's probably going to be a market gap for service providers, kind of like aligning users on both sides. So that's very interesting.
And look, we are seeing, like you said, Auth0 is kind of an interesting middle piece. The key element there is where are your keys in those situations. So, it's not quite decentralized, it's not quite centralized. In reality, I think there isn't a proposed method of being non-custodial and being easy right now. There's only sort of pieces in between, and you're giving up on a scales of security versus ease, and finding that right balance and finding the easiest but most trustworthy or decentralized method of access will be a major piece of this next 2 to 3 years.
That's interesting. Sounds like a play for middleware.
Definitely.
Cool. All right. So in terms of like FTX, John, what do you think in terms of like impacts on derivatives market confidence?
Well, I think what's kind of a nice benefit is, we were actually talking to a very large institutional brokerage right now, and before the FTX crash, they were looking at offering crypto derivatives and trading to their customers, and they were actually going to API into FTX. Thank God that didn't launch before it happened. And now the conversation has come around to, can we integrate DeFi protocols to offer those things instead? And I think that's a good push for us, for all of us on the stage. But just taking a thought on what can we learn from this exercise. Just that ease of use is something that definitely is leagues ahead of, unfortunately, where we are in DeFi. And improving that user experience is going to be key over the next couple of years. One of the ways that we've been trying to address this is with bridging. So we built the Messina bridge with the intention to enable interoperability, but our real push for it is we don't actually see bridging as a product, we see bridging as infrastructure. The ambition is to work with founders and protocols to integrate it into their dApps so that the bridging just happens seamlessly. The customer doesn't even have to think. I mean, we see a future where potentially on Algofi or folks, someone can come in with a MetaMask, they have USDC on ETH, they want to deposit to one of your vaults with USDC on Algorand, they just click and it just bridges behind the scenes. It lets them know in the transaction box, but it's that ease of use that we really need to work on, right? Because that's where the centralized exchanges made it so easy for people to come in. They didn't, like you said, they didn't have to worry about their passphrases or their keys. They didn't have to worry about which chain they're on or which wallet has access and all these things. And we've got a long way to go, but
Yeah, that's awesome.
great learnings,
And
yeah.
I want to add a bit on this. Centralized exchange exists from a bit much longer, right, than DeFi. So we are new, but I think we grow much faster than them, honestly. I think founders of DeFi, they are better, honestly. If you look at the exchange, they are mostly all the same.
Indeed.
We are different. Everyone is trying to innovate. And I think we will be better we grow much faster.
I think the key is we all have the same goal, which is decentralization. Where it delivers value over centralization is the core of what we want to achieve, and Algorand as a high-performance tech allows that. But I think the other piece that we have to be conscious of is I think for most humans on the planet, I don't know if I've singled out humans, but most humans on the planet won't understand how blockchain works, won't really care how blockchain works. That tech layer will be absolutely invisible to them, which is in reality the core to adoption. They just need to see the product they're using, see it as valuable, see it as useful, and be able to access it in the simplest way possible, as Jonty said, without having to really understand the technology underneath, because I think it's unreasonable to think majority of the world are ever going to understand or want to understand. The reference I always like to use is I have no idea how my email works, but it's brilliant and it's great and I use it every day and it's useful. And blockchain will be at the core of the exact same revolution for data exchange, and what we're talking about today in particular is finance.
awesome. I mean, you summarized it really very, very well, actually. So we have to hear today 5 panelists, and just now when I was behind, 4 of them came to me and say, hey guys, can we make announcements on the panel? So I was like, oh, I should carve out some time, for these guys. So let's probably begin with Federico. Maybe you want to go first and share what.
Yeah, of course, because of the event also, so we decided to go mainnet. So we have the first beta version of mainnet since yesterday night. We started the development last year, by the way, and we concluded the smart contract in May, June. Then we went to testnet. Then, of course, the market conditions were not optimal to go mainnet. But then now we released the first version, beta version in mainnet yesterday night. So if you want to try.
Awesome. John, how about yourself?
Yeah, well, Algorand has been out for 2 months now on mainnet, and it's been going pretty well. So we've only done Algo Vault's call and put. We're going to be launching next month together with our partners over at Optio. Vaults for GoETH and GoBTC, both calls and puts. And I think that's really, really exciting. But the push there is we're going to be growing the product offerings. We're going to be giving more options for people to get exposure to options. And on the Messina front, we have launched the SDK on mainnet, so we can work with protocols to integrate it behind the scenes and build an interoperable future.
Cool. And as a bank holder, I have to hear from Algofi, right?
Yeah, so our goal over the next 6 months is to fully decentralize the Algofi protocol, where we're hoping, the goal that we believe we can achieve is get it so that all of the execution and updates to the front end and the protocol smart contracts are fully mediated on chain by the community of governance token holders. And for that, that's a big achievement because for now it's been the core developers that are guided by the community, but we want it to be the community that's getting support from core developers. So that'll be our goal.
That's really cool. That's really, really cool. And last but not least, we have Folks.
Yeah, so as some of you may know, Folks Finance version 2 is already in testnet. We are deploying the new feature a bit by a bit, but Folks Finance version 2 is something that really never seen on DeFi. We are going to deploy on the version 2 stable rates, multiple collateral, multiple run position, flash loans. We already integrated Deflex, so we will have swap integration directly using DeFi and LMX, which are the 2 major aggregators on Algorand. And as well, the swap feature will be integrated in some of operation of the lending and together with the flash loans, so we will be able to do very advanced feature on a lending protocol that is not seen so far.
Awesome. Thanks, Ben. Thanks, everyone. Thanks for coming for the panel.
And it's going live on mainnet by the 12th of December, so get ready.
Awesome. Okay. Give it up for our panelists.
Is that us?
Thanks, Daniel.
Cool.
Okay.
Thank you.